How does the gift tax charitable deduction apply to art donations? Have you ever thought about how donating art can impact your taxes? When it comes to estate planning and gift tax, the gift tax charitable deduction plays a significant role. Let's break down how this works, especially for art donations. When you donate artwork, the tax deduction you can claim depends on how the charity uses that artwork. Artwork is considered tangible personal property. If the charity uses the art in a way that supports its tax-exempt mission, it's known as a related use gift. For example, if you donate a painting to a museum for display, that qualifies as related use. On the other hand, if the charity sells the artwork instead of using it directly, that is considered an unrelated use gift. Even if the proceeds from the sale support charitable activities, you won't get the same tax benefits. For instance, if a food bank sells donated art to raise funds, that's unrelated use. Now, let's talk about the deduction limits. If your donation is related use and the artwork is a long-term capital gain asset, you can deduct the fair market value of the artwork at the time of donation. This deduction can offset up to 30% of your adjusted gross income. If you can't use the entire deduction in 1 year, you can carry forward the excess for up to 5 years. However, if the donation is unrelated use, the deduction is limited to the lesser of your cost basis or the fair market value. In this case, the deduction limit is generally up to 50% of your adjusted gross income, also with a 5-year carry-forward option. To qualify for the fair market value deduction, you must hold the artwork for more than 1 year. If you hold it for less than a year, your deduction will be limited to your cost basis, which is usually the purchase price. For artwork valued over $5,000, you will need to obtain a qualified appraisal within 60 days before the donation. This appraisal must be attached to your tax return. The appraiser should be independent and cannot be the donor or the charity. If you are an artist donating your own work, the rules change a bit. You cannot claim a fair market value deduction. Instead, your deduction is limited to the cost of the materials used to create the artwork. Donating artwork can also be a smart move in estate and gift tax planning. It can help reduce your taxable estate by removing appreciated assets, which may help you avoid capital gains tax on the appreciation. You can also consider using charitable remainder trusts or other planned giving vehicles to donate art while still receiving income or benefits for yourself or your heirs. Another option is fractional interest donations. This allows you to gift portions of artwork over several years to maximize your deductions within the adjusted gross income limits. Just remember that the charity must physically possess or use the artwork during the donation period. In summary, donating art can be a strategic way to reduce gift and estate taxes. Understanding the related use requirement, holding period, appraisal rules, and deduction limits is essential. This ensures you maximize your tax benefits while supporting charitable goals.